Hi everybody, Brian from Bearable Traders here. It's Sunday, December the 9th, and just going to go over the week that was on the market. Really volatile week, of course. Anybody who followed the market would have known that by now. And I like to always start out by looking at some of the market internals, look at the number of stocks that are above or below their 50 moving day average and their 200-day moving average. You can see here where market internals are still looking pretty ugly. They started to look like they were improving, and now we're back down to about 80% of the stocks below their 200-day moving average, which isn't very healthy for the bulls. And again, significant amount of stocks below their 50-day moving average. So new highs, new lows. Also, 91% new lows on the day, and 9 or 8% new highs. Again, market internals look pretty sick actually. Again, this is the heat map, and you can kind of see here a lot of red on Friday. And our buddies, the utilities, still the shining star, if you want to call them that. Let's take a look, see how their sectors are performing. Again, utilities the only green day on Friday. Again, for the week, the utilities were up, and monthly performance again, utilities, all utilities. Safety play, obviously money moving into the safety trade on the market. And yeah, so let's take a look at the weekly, SPY weekly. You can kind of see here we're chopping up and down. We've got this level of support here. We've got this at around 260. We've got this level of resistance here up at the top, 280-ish. And that seems to be where we are stuck. And the question is, are we going to break this level, maybe challenge this level down at 254-ish, 253-ish? And if we do we continue to go lower? So I think that's going to be it's going to be an interesting week next week to see what happens on the daily here on the SPY. Kind of see what kind of a week it was. Again, this level of resistance to just over 280, 281. We gapped up there Monday after the G20 summit, sold off hard on Tuesday. Wednesday, we had the day off. Markets were closed. Thursday, we came back to a nice rally, and then Friday sold off again. So really volatile week, hard to hold positions. You just don't know whether to be short or long. And cash is a position, and in this case, it's maybe not a bad idea to be in cash until things kind of sort themselves out here. But you can see we're right back at this level of support. So question is, are we going to break it and go lower or not? Or are we just going to chop in this range? Again, my inclination is I think we are going to break it next week. The market's going to continue to go down, and you can kind of see here volumes and picking up a little bit. We haven't gotten to the volumes where we were back in February this year, but and some of these in early October, but it's certainly more volatile, more volume than normal. Let's call it that. XLU, this is the ETF for the utilities. One ETF for the utilities. You can kind of see here it's right back at prior, at a prior high back at the end of last year. And if you'll see if it continues to go higher. My one thought is if we do start to get money flowing back into some of the other trades, some of the other sectors, the utilities is going to do this, so it's really going to sell off. So we're going to maybe watch for maybe a shift back to money flowing back into other sectors, in which case the XLU will probably sell off. But if we continue to weak market, if it just grinds lower, this will grind higher. If we really get a hard sell-off, this might even sell off too, but it won't sell off to the same extent that everything else is, because you can see it's still holding up pretty well, even though we're having some pretty harsh down days. So, some of the retailers aren't looking very healthy. I was just looking at Coors, KSS. This is the weekly. You can kind of see here we made a double top here. Sold off pretty hard, and now we're right back. We're at this level of support, which is somewhere around 60. We're at 62.70 right now, and I think we could continue to drop lower. 60, 59-ish would be your first level of support, and then really you got a big gap there down to 40. 48-ish, so 47-ish. So could have a pretty decent risk to reward there if we get a good entry. And I would use this this level as sort of prior resistance as a stop out. Let's take a look at the daily here. So yeah, if we can get a good entry, maybe up a little bit higher, 64, we could take a trade on that for a short. I'm watching a number of other stocks right now too. Some of the healthcare stocks are kind of looking interesting. CLVS, ABEO, a couple ones popped up on the scanner that look like their 20 moving averages are turning up. I'll maybe do another video on those two as possible trades to watch for longs. But like I said, it's really hard to pick a position right now with the market being so volatile. Hard to take a position. Cash is a position for sure, and it's maybe not a bad idea to be in a lot of cash right now. Just wait for some opportunities. So guys, that's it. It's my book, How to Swing Trade. It's on Amazon. If you haven't checked it out, hope you might be interested in checking it out. And we'll see you in the Bear Bull Trading Room on Monday morning. Hope everyone has a good rest of the weekend, and we'll see you then. Bye for now.